Take on it. I mean, they're holding on to this $16 billion of planned capex for 2012. We saw that number beat pretty much on all fronts, the numbers beating. A really good result for Rio and unexpectedly strong.
Kate, a fantastic result coming through from Rio Tinto. The underlying profit, $5.15 billion, beating market expectations and beating most of, even the most bullish of forecasts in the marketplace. If we have a look at our expectations, we were expecting to see $5.07 billion in terms of underlying profit. It, of course, has beaten that. The market consensus stood at $4.94 billion. And with a profit of $5.15 billion, it's really shot that out of the water. And if we have a look at the range of analyst expectations, it ranged on the downside from $4.49 billion all the way up to $5.26 billion. So a great result coming through from Rio Tinto. One of the things we were watching was capital expenditure. Yesterday we heard from Xstrata that they had deferred $1 billion worth of capital expenditure for 2012. We have not seen the same thing coming through from Rio Tinto. They're still committed to $16 billion worth of capital expenditure for 2012. In fact, they've spent $7.6 billion of it in the first half, and that means they're going to continue with the Pilbara expansion, the development of their Simandou project, as well as their other projects which are in the pipeline as well. One of the huge positives to come out of this result today is not only that this result beat market expectations, is that we did see the underlying profits still falling 30% from a year earlier. $7.78 billion was where it was a year ago, and yet we've seen the dividend rising by 34% to 72.5 cents. And we know that shareholders have been calling for these miners to distribute more of their profits back to shareholders. It has been an environment in the last 12 months where those high yielding stocks have been very much in favour, and the market has wanted some of that profit back in terms of dividends back to shareholders, and it does look like Rio Tinto has delivered on that front. In the conference call, there will be a number of things that will be watched. First of all is the sale of their diamond business. There's a lot of talk about that at the moment. We know that BHP is also trying to offload its business as well, and the potential offloading of its Pacific aluminium business. So we'll be watching for that in the conference call, as well as any commentary on costs. We know in this type of environment we've seen commodity prices falling while costs have been rising. We haven't seen anything to do with costs as yet, but altogether a fantastic result coming through from Rio today.
Yeah, a pain for Stockland investors, but Julia, Computershare taking a real hit from weaker trading activity, but they're still coming out on top, still a good result, and shares up 6% today.
Kate, and I think that's the real difference between a stock like Stockland and a stock like Computershare. While they have both come out with earnings pretty much in line with market expectations, the commentary from Stockland, I guess, has been less clear for FY13, and really there's no sort of timetable in sight for a bottoming of the residential housing market, whereas Computershare, they have come out with a result in line with markets. We know that conditions have been tough, and yet despite these tough conditions, we have seen a very bright outlook for FY13. Now they are predicting once again earnings per share growth of between 10 to 15%. Now we know that the key drivers of Computershare are usually market activity, corporate activity, as well as the Aussie dollar. It is a global share register, and we know it's been very tough with the subdued market activity and market conditions, but it does look like their acquisitions are going to start to kick in to help their earnings along in FY13. So the acquisition of New York Mellon's share registry business has been a huge positive in terms of this outlook statement, and I guess there's two difference in share price performances, and the reaction by the market today comes from the two different outlooks, and Computershare coming out with a very strong outlook despite the weak market conditions, whereas Stockland not so clear on the path towards earnings growth in FY13 and beyond. And really what we're looking for there is a bounce back in that residential property market.
Tomorrow following this Rio result, because everyone's going to be watching it carefully. Very bullish. They say that China growth, they see that at 8%. They're continuing their capex. I've seen notes already suggesting we're going to see moves out of stocks like Telstra into stocks like Rio. What do you expect to see at the open, and how has this Rio result influenced that?
We really saw this rotation starting last week, this rotation out of defensive into some of the high beta areas, and it continued very strongly on the market today. We have a look at the three areas which ended up in the red and losing ground. They were all the defensive sectors, the telecom sector, the utility sector, as well as the property space. So it does look like investors willing to take on more risk and willing to get back into equities, and that's really reflected in the numbers today, where we saw more than $4 billion worth of stock being traded. But the flip side is that we have seen some of that money coming out of the defensives. We've seen Telstra down by 2.5% ahead of its full year result tomorrow, and also Transurban down by 4.2%. And some of the investment houses have started to reduce their ratings on these defensives, which have run up quite strongly. On the flip side, we're seeing a lot of life in the mid-size mining space. If we have a look at the material space, not only were the big ones like Fortescue and Newcrest doing well on the market today, but if we drill down in the energy space, we saw some of those uranium miners bouncing back quite strongly. ERA was up by 2.5%. We saw Paladin up by 4.7%, and Aquila Resources, which has been hit so hard in the last 52 weeks, a great bounce back for that stock, up by around about 9%. Of course, from tomorrow, we are going to be keeping a close eye on those China numbers. We'll get an inflation read, and in June, inflation was quite tame at 2.2%. The market expectation is that we are going to see it drop back to 1.7%, and that would give the PBOC plenty of room to move in terms of interest rates and in terms of stimulus for the Chinese economy. But we'll also get reads on industrial production, which is expected to come in at 9.7%, retail sales 13.5% growth expected, and then Friday we're going to follow it up with those trade numbers for China. And of course, in the June set of numbers, we saw a huge collapse in the import growth side of things. So we are expecting to see a little bit of recovery from the 6.5% that we saw in June to 7%. Exports expected to pull back a little bit at 8%, but overall expecting to see a trade surplus of about $35 billion. So it's going to be a big couple of sessions for that material space. We've seen Rio Tinto's half-year results out. Now we'll be viewing those China numbers over the next couple of sessions.